All right, let's try this again. Let's see if the audio is working. I think we should be good. Having the mic button on is really, really helpful. It's not like I don't do this 4 times a day. All right, let's get a quick audio and video check in. I think we're good. Yep. All right. Thank you, Nathan. Appreciate that. We got some folks tuning in on YouTube, Facebook. Excellent. So as I was saying, welcome to our State of the Market. For those of you that read lips, it's not the first time I've done that. So especially those of you that joined me for our morning pre-market show. All right. Excellent. Good to see everybody. Okay, so what we'll be doing here today is looking at the markets from the perspective of a slightly longer term outlook. What do I expect as we round out November? I'll talk a little bit about how we deal with the end of the month. All right, good to see you there. Good to see you. So what we're going to be doing is toggling between me and the charts, and I'll be able to share with you what it is that I look at. These are Thinkorswim charts. I also use TradeStation. I also use TradingView charts. Many of the tools that I'll be talking about are also available on Tastyworks, as well as Sierra and Infinity AT charts for those of you that are futures traders. So great to see everybody. All right, good. Excellent, loud and clear. Love it. Okay. So again, just a few things. If you join me each morning, Simpler Trading has a pre-market show called Charts and Coffee with Raghee Monday through Friday at 9 a.m. to 9:20. So it's a 20-minute show, pre-game show before you guys go into your respective rooms, whether that be the Simpler Futures room or whether that be the Simpler Options room or wherever it is you spend your morning, hopefully with us, but wherever it is you spend your morning trading. That's every morning at 9 a.m. on the very same channels that you're on right now. Nothing different you have to do, nothing you have to sign up for. So again, welcome to the State of the Market for November the 23rd. And yep, I think we got sound this time. It's really helpful when you turn the mic on. All right, so let's get to it. I'm going to jump right into the charts here. And for those of you that never joined us before, welcome to my office. I spend an inordinate amount of time in this room. Very lucky too. So again, welcome to my office. All right, let's get to it. So what is it? Let's start off with, you know what? Let's get a little notepad going here. All right, so let's start off with a few basic topics. What is it that I am looking at as we go into the end of the month? So what are the sort of end of month phenomena? Now we have the end of month phenomena when we wrap up a month and when we end up wrapping up a quarter. That is not going to be this month. So end of month, usually about 8 to 3 days before the end of the month, you'll typically see some selling. And this is redemptions. These are typically redemptions that you'll see, okay, that are most folks paying themselves. So oftentimes there's a tendency to see that. And this is straight from the Dash for Cash white paper that studied about 10 years, I believe it was, of different price movement and deduced that we oftentimes see redemptions the last 3 to 8 days of the month. And then we start to see that reinvestment, especially within the context of an uptrend. The first 3 days of the new month. So that's typically what we'll see as far as that end of month, beginning of the new month reaction. Of course, we have a truncated week with the Thanksgiving holiday. We have really a 2-day week because let's face it, folks are going to phone it in on Wednesday and Friday's a half day of trading. This is the kind of week where you want to focus on studying the kind of watch list that you have right now. What are the tactics that you should be now employing as opposed to maybe even a few weeks ago? I'll show you how to do that in our time here together. And then, of course, I'll take some questions, okay? All right, so let's see here. Where do we want to start? We will cover gold, no worries. We will cover gold. All right. Actually, we can start there. That's fine. Okay, so let's do that. A lot of questions on gold. I get it. We had today's move in gold was, let me bring this up to show you all. It was actually 47 points. The upper end of the price movement in gold, the upper end is usually about 45. Let me show you here. Okay. Notice it's about 45 points. You typically see at the upper end of gold in terms of the price movement ranges. Now, let's talk a moment about price movement ranges for those of you that are not familiar with what these are. Hourly or daily price movement ranges, they go back and they study the typical price movement of a market for the last 6 months. So what you're looking at here is a 6-month look back on Sunday, Monday, Tuesday, Wednesday. So basically, what is the typical price movement range, which is all of this right there? What's the typical price movement range we see in gold, right, each day of the week? So this is not just an average true range or something like that. It's similar, but better. So you have a typical expectation of price, and you'll see the upper end is about 45 points. So when we print a day that has 47, look, again, it's a lot, but it's not blowing away the typical upper end of a 68% probability of what we can see any day of the week. But it's really a Wednesday phenomena. But I'm not going to be surprised if we're going to push the upper end on any given day. We'll go up and print something around 45 points. So is today a lot of price movement? It was, but it wasn't, just a dramatic day. Not really. Once we start to exceed, by the way, so we're talking about Monday. So once we exceed about 37 points, start thinking about, well, what's the typical price movement range we would see? And right away, you start to recalibrate to, all right, the market's capable, 68% of the time, 2 out of 3 times, of moving about 45 points. So if you calibrate from, oh, wow, we just took out the typical Monday upper end of the point movement range, what's next? 45 is next. When we print 47, not exactly shocking, but it is the upper end of the range. So first of all, let's talk about price movement range before we get, into a lot of the hyperbole that you'll see in general market conversation. All right, so back to this chart. Now that you know what these price movement ranges are, back to this chart. 47 points moving lower. The 47 points is really not the point at all. It's the fact that we broke 1850. That's really the bigger issue, the fact that we broke 1850 today. So with that being said, looking at my notes here. Yeah, with that being said, what we have is a day that has taken out a very key level of support. So you might ask, all right, Rog, does this mean I sell gold? Oh gosh, please don't. No. In fact, you'll notice that there is a very interesting layer of support right here. It's a 200-period exponential moving average that is represented by a tool that we call the simpler propulsion. I call them prop dots. If you've ever heard me, how many here in the room have heard me talk about prop dots? Yeah? Say aye. Prop dots. Okay. So prop dots are, well, I'll show you. It's cool to be able to talk to folks after hours where we're not, in constant market scanning and, live market analysis. So what I do is I look at a series of exponential moving averages. That's what all these numbers represent. I'm looking for a cross. So that 8 is a 3-8 cross, 13 is an 8-13, 8-21, 8-34, 8-55, 8-21, 8-89, and an 8-200. 8 exponential moving average crossing those longer settings. Now, it's not just that. There's also, this is a free tool, by the way. The secret sauce in this free tool, it's part of the TOPS tools, which include my wave, my grab candles, a tool that I call Darvis 2.0. It's a reimagined Darvis box, and then these simpler propulsion tools, which are how I replace all my exponential moving averages on my chart. So with that being said, what we want to do is think about, well, where is that 200 EMA? And is it lit up? Is that moving average in play? And this one clearly, because those white dots are there, clearly is. So there's going to be support at that exponential moving average. A 200 is a very important moving average in trending markets and in non-trending markets. It's really the only one that transcends the limitations of moving averages being effective in a trend, which by and large, they only are. But when it comes to sideways markets, only the 200 really is still going to have my attention. So we've broken that level. It's not a short. Tomorrow, what I'll be looking for is, because this was like I said, that's not what I wanted to do. Because like I said, this was a day that was a little bit on the upper end of price movement range, likely in some response to the move we saw in the dollar, which you could see really clearly through the euro. For those of you that don't have dollar futures, or you can look at the UUP, but this is what I wanted to show you all. Okay. So, okay, there we go. What I'm looking at tomorrow, it's going to be another red candle for sure. But what I'm looking at is either an inside day like so, something that's trading within today's 47-point range. That's one scenario. The other scenario, after a significant move, as this is, no doubt, is perhaps a minor low, which should be a slightly lower low candle, but not a dramatic, another 40+ point candle lower, not anything like that, but rather just a slightly lower low, but a squat bodied candle representing either the inside day or either the minor low. We're going to use a squat bodied candle showing that the market is taking a breath. All right, taking a breath, taking a pause. It's not just dramatically moving lower. All right. So yeah, I'm still a fan of being long gold, but today's move to the downside, it's disappointing. It really is. This will be I'll show you right here. This will be the 1, 2, 3. It's the fourth time that I've looked at a bounce from this area. The first two are great. All right. So you could see the first two basically back in here. And here, and then here, I'm just waiting. I'm just waiting with some GLD calls, and just looking for a move to about 1914, and then I'm looking for a move to about 1945. But this is disappointing. Doesn't shake me loose from my GLD calls, but it is technically, structurally, a break of that oversold support. That's it. Okay. And one of the things that I'll be doing on the flip side of this, we talked about this in the futures room. So let's get tactical about it. If I have a move lower in gold, oftentimes that's going to accompany a move higher in the dollar. And I want to short those US dollar strength days if they create a pullback in three places. Really two, but potentially three. New Zealand dollar, British pound. It's a little bit more for my futures and currency Forex traders. And then finally, the euro. So 6N, 6B, and 6E. Those three markets is what I'd be looking for to get opportunistic on a gold down day, US dollar up day, and to buy those three. I'm very much a bear in the dollar. Okay, so there is that. Prop dots are great, Adam. I like them too, but I'm a little biased. I'm just a little biased. All right, so let's go ahead. Love the new title. Yeah, it's funny. The group that's been with me for about a month, I said, hey, look, I want to rename this thing. We're going to keep doing it. It's grown in popularity. We probably have just about 300 people in the morning, and it's been going for about a week. All the different channels. I was sort of doing it sporadically on it for the last month. And I said, what do you guys want to call it? And they said, well, a lot of charts came in, morning, coffee, because, I've always got some giant coffee mug. And Raghee. So I'm like, coffee, Raghee. I like the E's, charts, boom. Charts and coffee with Raghee. All we need is a coffee sponsorship. That's all we need, and we're good to go. All right. Do I like UU puts? I really don't. Like UU puts. Hi, excuse me. What? Victor, I'm trouble. Hello. Welcome. Hey, that's my mom. Like, Mom, I'm doing a show. Don't you know? All right. So I guess you turn the lights on. Okay. So as we are, where were we? UU puts. Yeah. Hi, Mom. Yeah, she does it all the time. I'll be in the room. I'll be in a trade, and she's either going to call or text me. How do you delete a bookmark? Like, Mom, I'm trading. All right. So if we are looking at the way in which we're trying to take advantage of that dollar weakness, right? Overall, yes. The question was, can we go with UUP puts? So the question's going to, so UUP, that's a terrific question. Who asked about the UUP? Devin. My only problem with UUP is this, my friend. Let me bring up the makeshift whiteboard once again. What is UUP? UUP is actually US dollar index. And the dollar index is a basket of currencies. And that means that you're betting on the dollar versus roughly 6 other currencies, 58% of which is the euro. Okay. So for me, if I want to make a really undiluted play on the dollar, I'll actually go FXE, because now I know this is euro versus US dollar, right? That's the challenge when we're talking about comparing the US dollar basket. That could be the DX futures, that could be the UUP ETF. So again, think about what you're dealing with. So when you are dealing with this, so the question then is, what else is in this, right? I mean, so you've got yen, pound. I'm trying to think what else. So what I'm trying to say, though, and it's a terrific question, what I'm trying to say is you're really diluted with all these different narratives versus just straight up playing dollar versus euro. And it's a cleaner way to look at, I think, the dollar. It's a cleaner way to look at the dollar, because the dollar has absolutely a negative or inverse correlation to the US dollar. That's really it. Okay, so I would go with FX. So the question is UUP puts. Actually, my friend, I would go with the FXE calls, and you could also go with FXB, because I talked about euro and pound. This is the ETF alternative. So I hope that helps. Yeah, I hope that helps. So FXE calls, I prefer to, unless you like that cross section of, unless you want to be long euro, long yen, long pound, long Canadian dollar against the US dollar. What I would say is go with FXB, which would be pound. Right? That's what I would say would be a better way to go. All right. So intraday, different conversation, right? If you guys are intraday trading, as I see Someone mentioned euro was down. Yeah, there is definitely some interesting opportunities to play the dollar strength to the downside. But if you'll notice, look at what happened though. So from a trading perspective, I hear you, but look from a longer term, from a day trading perspective, I hear you. From a longer term perspective, use those dollar strength days, U.S. dollar strength days, to find ways in which you can sell into that strength. Okay, so we talked about the end of month phenomenon. We talked about gold. We've talked about the U.S. dollar here. Talked about ways to trade that U.S. dollar. Think out of the box a little bit. Think out of the box, right? That's another way to look at it. And what else do we have here? Yeah, hi mom. Yeah, I gave her a what for in Bangla. All right. Can I explain how I play oversold plays? Hey there, Matt. Ready, aim, fire, or a slow stochastic, but it's got to be so the question is, how do I play oversold markets? What's a good example of an oversold market? What market did you have in mind, Matt? Was there a particular one, my friend? So first of all, let's talk about what the question is for those of you wondering, well, Rag, I don't quite understand the question. Let's talk about the euro, for example. It doesn't matter what it is, but any market that's got this yellow flag, that tells me, based on the 34 exponential moving average, we've got a sideways market. That's number one. And you can really see it on the chart pretty clearly, right? Let's see all this moving sideways in here. All right. The next thing then becomes, well, and this is where a lot of traders get into a lot of trouble. And you can see this in a number of stocks as well. When we talk about the state of the market, we're talking about the S&P, the NASDAQ. You know what? Let's think big. Let's talk about the S&P for a moment. Here's your S&P futures contract. All right, here's your S&P futures. It's green right now. It's reorganized into an uptrend. That double green, that's what I call a double green, tells me that the market's moving higher. 8, 13, 21, and 34 exponential moving average. That's what this is measuring. We see that that's really reorganized into something that I think is going to continue to go higher. But there was a good period of time here where the market wasn't green, and rather those trade flags were yellow. All right, and you can see where I've made that box. That box is not random. That box syncs up with this to this. Between those two check marks, this market was going sideways. That's that. So this would have been yellow, and it colors that right there, that yellow. Right? So how do we do this? First of all, we use exponential moving averages. We look at the history of the interaction of those exponential moving averages. We automate this, right? Because I don't want to sit around doing that every single day. And so we have this telling us that's a sideways market. And you'll notice it's just reorganized right here, right back into an uptrend. So first of all, before you start looking at choppy market approaches, make sure you have a choppy market. And by the way, that extends to before you start looking for trending market approaches. So let's talk a little bit about some tactics, and let's talk about the market that we have right now. The S&P, the Dow, and the Russell have all reorganized into an uptrend. Please don't try to pick a top. I know every now and then someone's going to say we're due for a big pullback and blah, blah, blah. Please refrain from trying to pick a top, because the path of least resistance, gang, I mean, I know this is going to seem kind of redundant, but the path of least resistance has been up, right? And for the most part, we've had green and green, right? This is going back to April, as you can see down in here. So, and we're reorganizing once again to green. So please don't fight what seems to be the path of least resistance. That's number one. Let's move over to the Dow. Number two, If you are going to play choppy markets, you've got to have a yellow wave flag, and that's going to sync up with this section of the tool. So this just gives you the history. This thing down in here, all of this is giving you the history of these readings. This is the now, right? This is my now reading, whatever's happening now. And this is what's happened in the past. So I can see what type of market we've seen. And by the way, when you're trying to understand your success as a trader, I will tell you right now, without exception, I know that's pretty heavy, right? But without exception, you can go back, look at the typical market behavior, and understand better why you were doing well in a certain environment. And then you can go even more granularly and say, well, what did I do when I was doing well? And you'll see it's going to sync up to certain market behavior. When folks say summer was great, let's be less vague about it. Why was summer so good? That's why summer was so good. We had a double green uptrend. Why do I call it double green? It syncs up with the color of the flags that I have here. Green means the structure of the 8, 13, 21, and 34 EMAs were indicating the path of least resistance was up. That's it. So when you go back and you look at your trade results through May, June, July, August, and into September, probably halfway through September, and you would do this per sector, per stock, and of course, per broader index, you're going to find if you're a trend follower, if you're a momentum breakout player, and if you're focusing on the long side, summer was just confetti falling from the ceiling all day, almost every day. And then, and how many people here in the room to say how many people that experienced the what? If I could make that record scratching noise, I would. Clearly, I cannot. What happened? That happened. We lost the bullish structure. And this goes to Matt, to your question. This is when we look at oversold buys. This is when you'll use perhaps a slow stochastic, something I used for many, many years, a free tool that you can use on any platform. I like a 21% K. I like a 3D. You could use a ready aim fire. A lot of you are familiar with the ready aim fire. It's another terrific overbought, oversold tool that's specific to these yellow market trends. Okay. So I think the thing that gets a lot of traders is they've got all these indicators, and we end up with new indicator syndrome or my favorite indicator syndrome. And the analogy that I use is you just went to the golf shop or the golf pro or whomever talked you into a new club, and now you just can't wait to use that club. Every single shot is an opportunity to use that new club for my golfers out there. Now, here's the thing. The shot is not about the club in your hand. The shot is the lie of the ball dictates the club you pick up and the shot you want to make. A lot of traders are trying to just swing their favorite club in their favorite way at everything. How does that work out on a golf course? Not so well. How does it work out in the markets? Not so well. So once you start to understand why perhaps this has not been as easy as all of this, right? You start to distinguish between, oh, well, what club was I using? What shot was I making? It's very different than this. You've got to change your indicators. You've got to change your club. You got to change your shot, meaning you got to change your strategy that you're using. What I just mentioned those few minutes, gang, if you can implement that into your trading, it's going to make the biggest difference. No exaggeration of anything, almost anything other than maybe following your stop and proper position sizing. It's going to make the biggest difference in your trading, because what happens to most traders is they don't recognize those shifts and they don't make the adjustments. Now, you still want to focus on oversold, what we call oversold buys. Why? Because the trend that was up. See, a lot of traders now will start to think, well, I need to fade the market. Wrong. Fade shorts, wrong. Don't do it. You want to focus on oversold buys. That's what you want to focus on, right? And a lot of traders don't do that. Respect the trend that was is the process, is what we talk about here. Where we have double green in the NAS, as we're wrapping up this year, is in the semiconductors. We're seeing it in communication. However, S&P, Dow, and Russell are all in double green right now. So that means you're going to see more of the sectors that are heavily weighted within these start to organize into double green. I think your XLK, which is your Microsoft Apple narrative, is probably a few candles and just a couple higher highs away from double green. But notice it is not a double green. The consumer discretionary, also not a double green. You've got a number of more S&P and Dow type, so non-tech, right? Energies, industrials, transports. These are really quite strong right now as we're going into, so wrapping up November and going into December, okay? So this is what we want to use, those moving averages. By the way, gang, all these indicators are doing is automating the process of using these moving averages that I'm talking about. All the simpler propulsion is doing is using these moving averages. Those of you that are members of our community over at Simpler, you've got free access to these tools. They are free to our members. And so this is something you can use. It's something you can do to tighten up the indicators that you're using. So you're using the right indicator for the right underlying market behavior. And then, of course, your strategies are going to be different in a trending market versus a non-trending market. And of course, we're going to respect the trend that was. Okay. All right. So what are the names of the indicators? Sure. This is called the JT trend, the label, and this is the JT multi-trend. So it's really the history. It's really what it is. It's the history of the JT trend, which are the moving averages. All right. So can I talk about what I believe is going on in healthcare? Yeah, healthcare, Devin, healthcare is just getting rocked by just this nonstop hyperbole, and just healthcare is getting rocked by all this optimism about, oh my gosh, mRNA, oh my gosh, PFE, vaccine, which is great. It's great news for humanity. Not so great for the underlying markets because the market runs out ahead of the narrative way too far. XLV has lost its double green, but as you guys notice, it lost its double green long ago. XLV hasn't been double green in months. So most of what I've been doing in XLV, even though I'm open to buying it, I am open to buying it. I don't want to short it. But really what you want to do is focus on certain really better performing parts of XLV. The problem is, well, here's XLV. A lot of the stocks have gotten hit hard, the ones that were double green. United Health is still double green, and AbbVie is still double green, but TMO, which was a very strong name for months, this is a great name that I was playing, trend is broken. Danaher, trend is broken. So it's pretty disappointing that some of these trends are broken. You're going to see this happen in the utilities, and you're going to see this has happened in healthcare. But it doesn't mean I want to short these markets. It just means I need to be more discerning. I'm going to play individual stocks, not the broader tide, although I am open to buying XLV. UNH might be a better individual play over the XLV, but it's just getting hit. Look, Pfizer pulled back right after the big news. And so the names that I've liked in XLV have been the names that really are not a direct impact from vaccine. UNH has been one of them. Danaher has been one of them. TMO has been another. I would not encourage TMO now. I would encourage UNH. I'd be patient with Danaher, but I'd focus perhaps on AbbVie, but I need to pull back before I'm going to do that. So probably your best bet on healthcare right now is to play UNH, which not only puts a foot in the XLV healthcare game, but it also puts a foot in the Dow, because this is a heavily weighted stock within the Dow Industrial Average. So when you take a look at the DIA ETF for the YM futures contract, boom, number one name, UNH. So you get to you get to UNH will benefit from the healthcare if it resurges, but it'll also benefit from strength in the Dow, which is fine right now. And I would say, you're going to probably be better off playing the Dow, the S&P, and staying away from tech and healthcare for now. Or if you are, be very, very choosy about that. Okay, again, we usually do these state of the markets for about 30 minutes. So I'm a little bit over on time. Some of the questions that are coming from my sector secrets folks, check out, meaning how we're managing things like XLU, how we're managing things like XLV, where do I want to look now with a brand new watch list. That has been sent to you all via alert. My futures folks, I'll see you all tomorrow morning when we're going to day trade the open, see if there's any gap psychology. Join me for the pre-market, 9 a.m., same channel that you're in right now. I'll be back on the mic, back on the camera, and we'll be talking about how I'm getting ready for the day trading day, some of the relative outperformers that I'm seeing, whether or not I see shorts. Right now, I still don't see shorts in the broader averages, and how we're preparing really for next week, not really for a lot of trading this week. Okay. All right, gang. Have a great one. Thank you as always for joining us for the state of the market. Again, I'm Raghee Horner. I'll see you all in the options room later on this week, the futures room tomorrow, and sector secrets folks. We're preparing for next week really and managing some of the long positions that we withstood the volatility through with the pullbacks. And pullbacks are opportunity, gang. If you're a trend follower, for the most part, pullbacks will be opportunity. By the way, before I leave you, any one of these double greens on the screen here, any one of these, UNH, Goldman, Honeywell, Cat, these are all buyable pullback environments. One other thing I tell you to take a look at as you roll into the end of the year, SaaS names, gang. I did a specific breakdown of some SaaS in our Sector Secrets Mastery. I think SaaS is going to be one of those things we might see some window dressing. I'm feeling pretty good about some of those setups as well. All right, gang, have a great one. And join me for the pre-market tomorrow. Thanks as always. And be good to each other. Go unplug this week. Enjoy some downtime. And I'll talk with you all soon. Be good to each other.